Assalamualaikum and good afternoon, everyone. Today we will make a presentations about our group assignment for corporate finance. Next, we move to the introductions. The efficient frontier theory was introduced by a Nobel laureate Harry Markowitz in 1952. An efficient frontier is a graph that plots its risk as measured by its standard deviations and the expected return on a portfolio of investment. This efficient frontier graph demonstrates the risk and return of trade-off of a portfolio. This graph can help us to visualize the efficient portfolio as well as also can be useful tools for investors to determine if their portfolio is performing adequately.
Top Glove Corporation was founded in 1991 by Tan Sri Dr. Lim Wee Chai. Top Glove has production plants in Malaysia, Thailand, China, and Vietnam. In addition, Top Glove has marketing offices in America, Germany, and Brazil. In 2001, Top Glove Corporation Berhad was listed on the Bursa Stock Exchange, and in 2016 it was listed on the Singapore Stock Exchange. Top Glove plan is to add factory to make a total of 56 factories. Top Glove has 1,375 researchers working under the factory development. Top Glove has 10 research and development center, 7 in Malaysia, 2 research and development center in Thailand, and 1 research and development center in China, with a different research focus. Next is Bermas Auto Berhad. Bermas Auto Berhad started operations in 2008 after Bermas Auto and Mazda Japan after the two companies enter into an agreement giving Bermas the right to manufacture specific models of Mazda CBU vehicles, spare parts, accessories, and tools in Malaysia. Bermas' main business is the distribution and retailing of various types of Mazda products and providing after-sales services to Mazda customers. Their focus is to improve vehicle safety, climate protection, and production energy efficient vehicles (EEV). Bermas has an environmental policy to ensure the sustainability of nature continues to be preserved. To achieve their target, several strategies have been made such as minimize waste, minimize toxic emission, promoting recycle, promote environmentally friendly products, and use accredited programs.
Hello everyone, I will present about adjusted close of Bermas and Top Glove. The adjusted closing price adjusts a stock closing price to reflect its worth after any corporate action have been taken into account. According to the table above, the adjusted closing price in February decreasing from 1.737396 to 1.69552 and is still decreasing in March. Adjusted closing price for Bermas in 2020 is in the range of 1 until 1.8 Malaysian ringgit. To conclude, adjusted closing price for Bermas Auto Berhad can obtain the adjusted closing and a better picture of return. Next is adjusted close Top Glove. According to the table, adjusted closing price increased until October and decreased in November, which are 1.734524 to 6432, 635 and are still declining in December. For a conclusion, Top Glove can obtain adjusted closing price and a better view of returns. That's all from me. Thank you.
Hello everyone, my name is Su Eun Hui with metric number 76903. Now I will present the justification for the returns of Bermas Auto Berhad. Bermas Auto Berhad has more negative returns than positive returns in year 2020. From the table on the left, we can see that Bermas Auto Berhad has met the highest return, which is 20.35% in March 2020. The highest the return, the highest the profit gain. This means that Bermas Auto Berhad has gained the highest profit in March 2020. Next, let us move on to the justification for the returns of Top Glove Corporation Berhad. Top Glove Corporation Berhad has obtained positive returns from February to July 2020 continuously. According to the table on the left, Top Glove Corporation Berhad gained the highest return, which is 83.2% in April 2020. However, the return started to decline in October and November. This means that the company was experiencing a loss.
The portfolio return shows the gain and loss realized by an investment portfolio containing several types of investment. The table shows the monthly portfolio for the year 2020. From the table, we know that the highest returns were on April and the lowest were on February. Next is portfolio mean. Mean return is the expected profit and loss an investor expects to achieve from a portfolio of investment. The table shows the mean return of the two companies. As we can see from the table, the highest mean is 14.52% and the lowest mean is negative 0.49%.
Portfolio variance is measurement of risk of how the aggregate actual return of a set of security making up a portfolio fluctuate over time. Modern portfolio theories state that portfolio variance can be reduced by selecting a mix of assets with low or negative correlation. The correlation we get is negative 0.222562382. Portfolio standard deviation is the financial measure of investment risk and consistency in investment earnings. It's an indicator as to an investment risk because it shows how stable its earnings are. High standard deviation in portfolio indicate high risk because it shows that the earnings are highly unstable and volatile. The highest standard deviation is 30% and the lowest standard deviation is 13%.
The graph efficient frontier. Investor will look for efficient portfolio that can help them maximize expected returns and that can reduce investment risk. The expected return is moving with the standard deviation. It means that when the expected return is high, so the risk is also high. This is because the investor is demand high expected return if the risk is high to invest in the company.
For conclusions, the main objective of this assignment is to develop and making an efficient frontier line in investment portfolio from a few companies listed in Bursa Malaysia. We have chosen Bermas Auto Berhad and Top Glove Corporation's Berhad Efficient Frontier Graph because they have a positive efficient frontier graph than others company graph.